Okay, we just got numbers from Paramount, Skydance, and they're seen as mixed. The timing is significant, though. Paramount continues to compete with Netflix in the struggle to acquire Warner Brothers. Let's get more from Matthew Dolgin, senior equity analyst at Morningstar. Matthew, great to see you, and thanks very much indeed. It seems to be a mix. Let's put up the stock in Paramount. I know to a large extent it's being driven by the competition to acquire Netflix. But what jumped out for you with these latest numbers from Paramount?
Well, the thing that jumped out most is that it is having some success with Paramount Plus and its streaming service, which is extraordinarily important because that's what the future of the business rides on. And I guess to step back a little bit, we think that the firm is on the right track. We like the start that the new management team is off to, and we're enthusiastic about Paramount at the valuation right here. Although, of course, as you said, Warner Brothers Discovery is the big wild card out there. And we'll see what happens with that, whether Paramount wins it, how much it has to pay if it does. And so things can change. But as the business stands right now, and if it doesn't get Warner, we like the track that Paramount is on. It's in a declining business, but it is moving in the right direction.
So their streaming business is doing okay against the big E, Netflix, for example?
Well, it is no Netflix, and that is one of Paramount's issues and why it is much more important for it, we think, to be able to acquire Warner Bros. Discovery to bring those two platforms together. However, while it's nowhere near Netflix right now, it is moving in the right direction. Revenue is growing really nicely. It continues to add subscribers. And although profitability took a little bit of a step back after being positive the last 2 quarters, it was still a drastic improvement over last year. The segment direct-to-consumer itself, which is mostly Paramount Plus, did reach profitability for the first time since Paramount Plus launched. And so really, we like where the streaming business is going, even though it is still small, and the future will be different whether it acquires Warner Brothers Discovery and therefore HBO Max to kind of merge with Paramount Plus or not.
And who is in the lead? Sorry, you touched on this, but who is in the lead to acquire Warner Brothers now? Who is the most likely buyer?
Yeah, that is a really tough call because we almost would say it's 50-50 between Netflix and Paramount. We think that Paramount has put out the better deal as things stand right now. We thought that was the case even before Paramount revised its offer this week, and then it sweetened it a little bit. So now it is offering $31 a share for Warner Brothers Discovery. It also has a so-called ticking fee, which means that starting on October 1st of this year, every single quarter that the deal hasn't closed, shareholders would get another 25 cents. And then it put in some other sweeteners to kind of ease the Warner board's concerns or some of the things they cited for why they preferred Netflix's offer. We've said many times these are not apples to apples deals, so it's not straightforward or objective which of the two competing offers is better. But Paramount did put in those other assurances and sweeteners. And so even more so, we think Paramount's offer is a little bit better right now. However, if the Warner board does indeed throw this back to Netflix and say you need to essentially make a little bit of a better offer, we don't think Paramount has raised it so much that Netflix would let that pass. And so to your question of which one is better or which one is more likely to acquire, we do think it's a toss-up. We think the Warner board probably ends up continuing to prefer Netflix, assuming Netflix is willing to even sweeten its offer a little bit. But then it's going to be up for the shareholders to decide and for them to approve if they do actually get to vote on that Netflix deal.
And there's been speculation, though, that Paramount would have to take on a pile of debt here to push this deal through. Would that tend to well, not cripple them, but would it clip their wings as they try to pay down the borrowing?
Well, the thing about Paramount is that it is not your typical company because it has the Ellison family money behind it. And so normally we would have thought that this type of deal would not be possible for a company in Paramount's financial position and of its size to undertake. But with that money behind it, and this is one of the things they kind of addressed as far as if debt's concerned, will that Ellison backing be there? And the answer is essentially yes. And so that kind of makes it not the same analysis as whether you're looking at it without that factor and the debt that they have. So to your question, normally it might be a concern for how they'd operate going forward. But in this case, we don't have too much concern that the money will be there for them to build and grow this business like they need to.
We'd better go. Thank you very much, Matthew. Really appreciate it.
Thanks for having me.
Matthew Dolgin, Senior Equity Analyst at Morningstar.